Hi traders, Dale Pinkert here, getting ready to wrap up the week. Hope everyone has had a great week, trying to guide you in these, at times, low volatility with pops and drops. And so here we go. I'm going to talk about the crude oil market. We've had the market come off to have a 2-day reversal here today. We've come off from the highs of 64 and a half, only about $1 under the lows. If you can see that this red line, which was the wedge line, the throwover line, is really going to be significant to seal the fate for crude. I have a little different view. I think that crude is in a peaking mode. Maybe there's one more move to 66, but I actually believe that down the road we could even challenge the lows from January. So I thought I'd include an ETF that you might want to consider if you're not a futures trader. And the chart that I included, the ETF is called DRIP. Okay, so I believe it's Oil Service Companies, DRIP. And as you can see on the daily, we're a little bit under these moving averages, which say there still could be a little bit more downside and perhaps crude rallies a bit more. This is going to take advantage of falling oil and gas exploration companies, which if crude prices drop, the incentive to drill and explore kind of goes to the wayside. So there is potential, if I'm right about crude, for this to begin to base and then begin a trend or at least a correction back to the upside. And the metals, after calling this recent rally we had this week, and I talked about silver having weaker structure, we have a pretty negative day, a very negative day in the gold, and I thought I'd suggest an ETF that could take advantage of a falling gold price. Now, gold could rebound, and this wasn't a tremendous move in dust. DUST is a symbol. Perhaps we could get one more sell off, but as you can see on the daily, at the recent two lows, we did not confirm the lows, so we have pretty glaring divergence. And even if the dollar weakens, I would view anything between here and 16 as a buying opportunity. And even though I'm not long-term bearish gold, just looking for possibly back to 1240, 1250, the shares could come under pretty good pressure, especially if we peak in the S&Ps. I'm looking at potentially 29, 25, or it could happen any day. Anyway, just a normal retrace back to the 28 level to retrace this huge decline we've had in the shares is a very nice percentage move. So it's my hope that I'm adding value to your experience of learning about the markets. If you want to learn more, you could find me on Twitter. My Twitter handle is @Forex Stop Hunter because I know where your stops are. And I could teach you to know where everyone's stops are as well. It's really not rocket science. Remember, just don't count your pips, count your blessings, and see everyone on Monday. Adios.